Hey everyone, welcome back to the Mark Loeffler Experience. Happy New Year. All you real estate investors out there, let's kick ass this year. Let's not let that federal government scare us. Right before the holidays, the Liberal government put the real estate investors in their crosshairs. What do I mean by that? They distributed mandate letters. These letters contain orders for the minister to execute and are usually pretty dry. A big exception is the Minister of Housing mandate letter, which puts real estate investors in its crosshairs. The minister has been ordered to cut profits, deter speculation, and limit leverage. Here are the key takeaways. Obviously, Canadian real estate has been very profitable over the last couple of years for Canadian real estate, for investors. And obviously the government, when they see people making money, they want their cut because obviously they worked hard for it. The mandate includes various investor taxes and reforms to reduce excessive profit. Here are some of the noteworthy ones. This is what I found pretty interesting. Excessive rent surplus. The Income Tax Act will be amended to require landlords to disclose rent pre and post renovation. If a minimal renovation was executed and the rent surges, you might be hit with a tax to reduce profits. If executed, landlords might obviously reconsider rent evictions. So they're trying to stop people from doing rent evictions. I don't know how they're going to say substantial. Like if I spend $35,000 on a unit, totally redoing it, making it brand new, is that going to be substantial for a $400 a month increase? Who knows? If I don't do anything and I just put it to market rent, what happens then? I don't understand. Obviously, we have a housing shortage. We have a rental shortage in most parts of Canada. Not where I'm investing right now because we have an 8% vacancy rate out in Edmonton, Alberta. Yet, I think that's going to change. With stuff like this, less people are going to build rental units. Less people are going to invest in rental units. I don't know if that's their goal, but that's what they're going to make happen. Anti-flipping tax on residential properties. So planning on flipping a property for less than 12 months, well, you might have to pay an anti-flipping tax. And I don't know what that is. Like most flippers I know are paying active income that they run through a corporation. And I know a bunch of them have checked it with their accountants who say they shouldn't be that worried because, again, they're paying active income on that money anyways, which is the highest form of tax in Canada. Basically, why they're saying this in their mandate is, they say flippers are a very small percentage of the population, but they reduce liquidity and replace it with a higher price unit. The marginal buyer has a disproportionately large impact on home prices, similar to money laundering. I don't believe that. I know a lot of people who take, a condemned property and turn it into something that somebody can live in. So they take an abandoned, condemned property and turn it into something somebody can live in. Then are they adding to the housing stock and then therefore contributing to the overall market and keeping prices low? Or are they causing houses pricing to go up and changing liquidity? Comment down below. You guys let me know. So they're going to be reviewing tax incentives for real estate investment trusts. So REITs are a type of investment that hold real estate and generate income through rent. So the trusts themselves aren't taxed on the income or gains made, making them tax efficient entities. Basically, they pass on the tax liability to whoever holds the certificate. So the REIT holders pay the tax on disbursements from the REIT, but those can be deferred or reduced by registered accounts. So obviously, they're not going to get rid of registered accounts. So why not just say, hey, a lot of people hold REITs in registered accounts because it's more tax efficient. So we're gonna make the REITs pay us instead of the registered accounts. I mean, just gonna leave it out there. Yeah, you're gonna see limits. Hurdles erected to limit the attractiveness of real estate. One of the things that in their notes is it says residential investment recently overtook productive investment for the first time since 1960s. I don't know if that means like new housing, rental housing, or people just investing in general. Maybe they're scaring away other people who want to do business in Canada, who want to build pipelines or want to build factories, or they want to build refineries or whatever that might be. That doesn't fit into their vision. And yet that's a lot of money that would be spent on production. So is it just the fact that there's a lot of people investing in real estate, or alternatively, are they scaring people away? Comment down below. Oh, this was a good one. Review investor down payment requirements. Investors might soon need more down payment, limiting leverage. This is a move that other countries have recently adopted, including New Zealand. So they could change the Banking Act to basically say that if you get a loan from a bank for an investment property, you need to put down 25, 30, 35% on a residential property. I am just going to share this bit of news is that on the other side, CMHC has now said, hey, we want to do 95% mortgages and 50-year amortizations on the commercial side, so the apartment building side. So maybe here's the thing. If it gets harder for somebody to buy a single family home and rent it out, and it gets easier for me to buy apartment buildings, I'm going to see more people come to my apartment buildings and rents are going to go up because there's going to be lack of inventory. So who wins? There's all these unintended consequences. So I look at these new rules and I say, well, great. How can I play within them? I love buying real estate. I do like the thing. And maybe that'll change in the future, but I still like it. If REITs have a harder time getting financing, buying, they're not going to get as much money because people aren't going to buy their units because they're not as tax efficient. Maybe they have less money to spend. Maybe I'm not competing with those REITs on the same buildings that I'm competing with right now. I'm just putting that out there. Temporary ban on foreign buyers. Ban would apply to non-recreational residential property. So again, they can still buy apartment buildings, they can buy industrial, they can buy cottages. They just can't buy a single family home. This is just mainly window dressing. If somebody wants to buy a home, they can just basically get a nominee, like a student in Canada that's going to live there or do whatever, own the property, the $4 million property, they're a student. You know, it happens all the time. Still will happen. So here's the one that just, curbing excessive profit for real estate investment properties. It's very, I guess the word would be ambiguous. Very ambiguous. It doesn't really give a clear directive on what that means. It only says they'll do so while also protecting small independent landlords. Most likely this means they'll be looking into institutional landlords, and no plan usually means they do very little. So I don't know how they're going to do that. So, I mean, here's the thing. The government is on, they're teetering right now, right? They're on this teeter-totter. They love real estate investors, right? Because they provide capital incentive for builders. So people who are going to go build these communities, obviously increasing the supply of housing. And then on the other hand, they're running a business. They're not a charity. And they're obviously their incentive to provide capital and to get the builders building and doing that type of stuff is to make a profit, right? Like, it's just as simple as that. If you're not making a profit, we're not running a charity. Obviously, the better returns, the more capital gets put into the market. I can leave it at that, right? In the words of the bank regulator, this is a self-fulfilling prophecy. Investors often pay more because they expect higher returns. In Ontario right now, people are paying less than a 3 cap on apartment buildings because they know that when somebody leaves, they can get it to market rent and therefore turn that building, be able to cash flow that way better. Even though they're buying it at 2.5 cap, they can likely eke out a 5.5 to 6 cap over time. How serious is the government? How serious are the Liberals about these measures? Obviously, it remains to be seen. Are they just, flapping their gums? There are signs pointing to the fact that they're serious. The Canadian government is providing a significant cash, loans, subsidies, etc. to developers. And obviously, they're ready if they make these measures and people then take that capital and go somewhere else. I mean, this will all be interesting. I'll love to see when this plays out. I look for the unintended consequences. What will happen in the future based on this ruling? And I don't understand why they don't look at these unintended consequences. I'm not saying I'm smarter than them. I'm just saying they don't even bother looking. And, stay tuned because I will bring you those unintended consequences when we get more of what's going to happen with this. All right, everyone. 2022 is going to be a great year. Doug Ford, don't lock us down. Catch you guys next time. Have a great day.